Hi, in this lecture on financial administration, we shall be discussing about what is budget, what is the purpose of making a budget, and what is the significance of preparing a budget, both for an organization or a business as well as the government. So let's get started. In common parlance, a budget is basically known as an annual financial statement which is prepared by the government or the management of an organization for that particular financial year. It requires both the exercise of an estimation as well as controlling or judging the previous year's performance. So the budget as a process is basically related to the designing of the budget as well as implementing that budget throughout the year or in the course of business financial cycle. There is also an importance of operation of the budget. So basically operation here implies that whatever the estimations are being made in the budget, whether they concern with the revenue aspect of the budget or with respect to the expenses that are estimated in the budget. Both of these revenues or the expenses have to be made throughout that financial period for which the budget has been prepared. Generally, a budget is prepared for 1 year's time. It may also be prepared for longer or shorter duration as per the requirement of the organization or the government. A budget can also be defined as an estimation of income and expenses, therefore, and thus it is also concerning the future plans as well as objectives. It may also include planned sales or what is the volume of the sales that the organization estimates for the financial year coming ahead. It may also relate to the various objectives of the organization or the government that they strive to achieve in that financial year in the monetary aspect of that objective. There can also be aspects of revenue or the cost that they want to control or that they want to increase or decrease as per the requirements of the organization or the government that is preparing the budget. It is also equally important to highlight the liabilities or the liabilities that are to be paid off during that financial year. It is also inclusive of the cash flows from where the cash will be coming into the organization or the sources where the cash will be going outward. There is also a mention of resources in this budget itself. For example, any creation of long-term asset that the government aims or that the organization creates to acquire shall be mentioned in the budget itself. The preparation of budget thus also involves effective utilization of the funds. So effective here means timely, that is within the framework or within the deadline that the government or the organization has set for the attainment of the objectives which are set in the budget. And then these timely utilizations of the funds also imply that whatever scheme the government is directing the funds to shall be utilizing those funds throughout the year and not just towards the end of the financial year or at the beginning of the year, which is often seen in the various government schemes. Similarly, in the business organizations or in any such organization which has a formal structure and which requires a channelizing of funds for its operations shall have to be effective in the utilization of the funds. Otherwise, these funds will be either utilized in rush towards the end of the financial year or go in vain. Further, the budget process has 4 steps. The first process is of course of the formulating the budget. Herein the government lays down what cost or what expenses the government will be bearing in a financial year. At the same time, the government also takes an estimation of the incomes that the government expects to generate in that financial year. For example, the government may set a target for GST collections. Similarly, a private organization may set an objective for sales or the revenues. And once this formulation is done or the budget is formed, for example, when the government formulates the budget, it presents the budget at the floor of the Lok Sabha. and then it is approved by the parliament and further by the president. So the second step has to be approval of the budget. In a private organization, the approval function will be done by the management of the organization or the board of the directors, for instance. There can also be the execution of the budget. Herein, the private organization shall be imposing the responsibility on the chief executive officers or the CEOs. There are also CFOs, chief financial officers in such organizations. Within the government, there is a Ministry of Finance that executes the budget by directing or channelizing or allocating the funds as per the budget. Further, there has to be an oversight over the budget. How much of the budget has actually been realized? Are the objectives that being mentioned in the budget are also converted into the reality? So all these estimations have to be overlooked or oversighted by some body. In parliament, we have various parliamentary committees as well. There is also the institution of CAG. For the private institutions as well, there are mechanisms of auditing, etc., which keep an oversight on the budget. And further, this oversight leads to policy inputs for the next budget or the preparation of next budget. So basically, there is a cyclical process of budget preparation. First, the budget has to be formulated, then approved. Once the budget is approved, it has to be realized or converted into the reality. That is the process of execution. And whether this execution has been done in an effective and efficient manner is considered under the budget oversight. And once this oversight report has been prepared about the budget, it will be providing a basis for the formulation of next budget. That's all for the budget process. Now, let us focus on